Hello and welcome to today's pre-market video. Now in today's pre-market video, we'll be taking a look at the Sensex Index, what option buyers and option sellers can do, while also taking a quick look at the news front. Now on the local news front, there's not much. This is as everything is more company specific, like TCS has released its results, but that's I think for discussion in another video, not in this one, as I'm not focusing on TCS here. On the international news front, basically the US market is still bogged down by the Fed minutes which were released yesterday. The Fed minutes showed that actually the Federal Reserve Committee did not want a 50 basis points rate cut, but the Fed chairman Jerome Powell is the one who went and pushed his way through and made the 50 BPS rate cut come. The job numbers have come out way better than expected, but the inflation numbers have come in very hot. So that has caused neutrality, and that's why if you look at the US market as when I'm recording this video the night before, it is practically flat, so slightly below zero. It's trying to find direction as one side the numbers are bad, one side the numbers are good, and the Fed behind is there utterly confused. So that is why the market is presently how it is trading today. Now coming to the Sensex. Now for today's Sensex video, I am taking a look at the Sensex Index future of 11th October 2024. If you can see, it is highlighted above here. So if you are going to use this analysis of mine and my price levels, then don't try and go deploy them in the monthly chart, as they will not work there. This is since we are trading the 11th October 2024 expiry, I have placed them on the 11th October chart, and we are going to use that specific futures chart to decide our options. Now Sensex, when we look at it in the overall picture, Sensex has been trading in a box range. This is as it had a big fall like the other indexes, and everyone who's been watching my videos knows we caught the fall. We caught it very nicely. Now after that it has been basing out, and it might look like in this picture it's a wide base out, but it's not, because this is the 15-minute chart, so everything is magnified. But if you let's say load the 1 hour chart or 3 hour chart, then things are in a very tight range, and that is why I have had to go to 15 minutes for this video, so things can be visible. On the 1 hour chart it looks like everything is mashed up. Now my trading plan for Sensex is pretty simple. I don't think anyone should do option buying tomorrow unless it breaks above 82,050 or 81,450. This is unless you're a very good option trader on the option buying side, you're not going to make money tomorrow. Why? Okay, this range might be a bit bigger, but if you take a look at the range of the past few, let's say 1 to 2 days, it is this small. So it is really tight. It's between 81,450 and 81,900. It's not even hitting 81,900. It's going to about 81,750. And it's not, so let's say 81,500 to 81,750, a 250 point range in an 82,000 index is very tight. So unless you're a very good option buyer, don't trade the Sensex tomorrow until it breaks 82,050 or 81,450. If it breaks either of this side, then is when it will give you a big move and you can make profit. Otherwise you will just end up buying let's say you buy a put or a call, you might buy it at 100, and due to the range being so tight, by midday you'll be at 20. Tight range plus expiry, you'll literally lose all your value in the option, so it's not worth it. Even if you go to next week's options, like I usually advise, they will still end up getting hammered because of how tight the range is. So if you want to do option buying, I would suggest forget the Sensex until it breaks that range, go to the BANKNIFTY. Even forget the Nifty. Nifty is too tight. The BANKNIFTY is the only one right now I think which can give you something in option buying, but in this tight range. Now as I said, if we break 82,050, then you can come in heavy for 82,300 and 82,550. On the other hand, if you break 81,450, then a big move to 81,020, and we can go until 86,00 to 87,50. Now, how to decide whether that move is going to come or not is if you look at the volume build-up indicator is completely neutral. Trend catcher indicator, if you look at it where we have the box zone is narrowed further, it has basically come right below the zero line and it's completely gone flat. The black and red line are intertwining constantly. Now, on the trend catcher indicator, you can draw the lowest peak and highest peak of this range. If it breaks either of those, then we're going to get a move in the chart, because anyone who uses that indicator knows it basically keeps up the pace with, all indicators are lagging, but this one tends to keep up the pace with the price action. So you can expect the move to come. This is until it breaks those peaks on both sides, on either side. Any move will be basically a false trap that's going to just wipe you out. So all option buyers, even option sellers, base it on that. So I've given my option buying plan. Now my option selling plan is pretty simple too. Option selling plan, if you're an aggressive option seller, before in fact going to that, I personally will be selling both calls and puts. Past videos I've been saying I'm going to sell calls in the morning or puts in the morning, and then the other part in the latter part of the day. However, here I'm going to sell calls and puts at the same time. But if let's say if I'm going to deploy 100 rupees throughout the day, I'm going to deploy 60 by 2 p.m. in 20 batches of 10 depending however I'm comfortable with the index at that moment, and then 40 will be deployed on one end after post 2 p.m. Why I'm going to do that is I believe because of the box range, both sides are going to constantly earn. So let's say if you have, let's say post open, a bit post open, you have entered call sells above 82,050 and put sells below, let's say 81,450. Now those because of the tightness, they'll constantly be earning something. So keep a profit stop to ensure that earning is kept, as one side is going to pop most likely, and that side let it get stopped out and let the other side ride on, because there is no clear direction right now. So that's the only way you can do it. Not like how I usually say, go for put sells first aggressively, then you can sell call sells once it reaches this resistance level. Tomorrow is not that. It has to be a balance between both. Now if you're an aggressive option seller, I would sell calls above 82,050 and puts I would still say below 81,250. This is I have not put a support there because there is no quant support there. There is a quant support here, then a quant support directly there. But we have a simple candle support. I usually do not bother with them in the videos, but due to this range being that wide, I am going to bother. It's just a precaution. But if you're a cautious one, then sell above 82,300 and below 81,020. Now how will I do? Will I choose aggressive or cautious? I'm going to be aggressive on the call sell side and cautious on the put sell side. So I'm going to sell 82,050 calls and above. I'm going to sell 81,020 puts and below. I expect one side to be triggered out first, so I'm going to keep a profit stop and let it ride out. And let's say if I've sold at 100 and by midday it has come to 60, keep a profit stop at 70 and let it get triggered if it tries to spike to any of those sides. So that's my trading plan for option buying I've shared for option selling. Any questions, drop them in the comment section below and I'll give you a response, or you can WhatsApp them to the number shared below in the description box. Thank you, and hit the like button and subscribe to the channel.